All right, welcome to today's explainer. If you're a focused learner looking to protect your livelihood, and let's be real, your bottom line, out there in the commercial driving world, you are in exactly the right place. Today, we're breaking down a massive, often completely misunderstood financial threat: the hidden costs of driving violations on your trucking insurance. We're going to see exactly why premiums suddenly skyrocket, and way more importantly, how you can protect yourself. Okay, let's dive into this because this quote right here, it captures a shocking reality that hits truckers hard, literally every single day. So many drivers get pulled over and think, well, it's just a ticket. It's a minor nuisance. I'll pay the fine, move on. But as you'll see, that is a wildly dangerous misconception. That single piece of paper can trigger a financial avalanche that absolutely threatens your entire business. So here's our roadmap for this explainer. We'll start with the hidden premium shock, then look at how insurers predict risk. After that, the most costly violations, followed by the nuclear verdict threat, and finally, protecting your driving record. Kicking things off with Part 1, the hidden premium shock, and the unique danger it poses to owner-operators. Now, to really understand this premium shock, we first got to talk about the MVR. Your motor vehicle record is essentially your permanent driving history report card. When you go to get insurance, or when it's time for that dreaded renewal, insurance companies are pulling this exact document. They're looking at the whole shebang: your tickets, accidents, past suspensions, basic violations, and of course, any specific CDL issues. This one single document is the absolute gatekeeper for your eligibility and your rates. And right here is where the massive disconnect happens. It's literally night and day. The driver looks at those flashing lights in the rearview mirror and thinks, man, it's just a ticket. But the insurer? No way. They do not see a simple traffic stop. They are applying cold, calculated math. To them, your MVR is a hard risk profile predicting your future claims, accident frequency, and massive lawsuit exposure. You aren't just a driver to them anymore. You are a statistical probability. Let me give you a real-world example from our source data that illustrates this perfectly. Imagine an owner-operator who's had a spotless, squeaky clean record for years. One day, they slip up. They get a single speeding ticket for going 20 miles per hour over the limit. When their insurance renewal rolls around, their premium increases by nearly $6,000 for the year. $6,000! One single ticket literally rewrote their entire financial landscape. Moving right along to Part 2, how insurers predict risk and the cold hard math behind your premiums. Look, insurance is an industry entirely built on predicting risk. Underwriters use these highly complex algorithms, statistics, and historical claim histories to calculate your specific driver risk score. They know definitively that certain violations are incredibly strong predictors of future losses. And they don't just check this once either. MVRs are reviewed annually, at renewal, and sometimes even continuously by fleet managers. It's also worth noting that new authorities and young drivers, they pay a premium right out of the gate, simply because they lack that proven, clean history these models totally crave. Now, what's really interesting about this is how insurers piece together the full puzzle of your driving habits. They don't just look at your MVR, which covers your speeding, accidents, and DUIs for the individual driver. They actually combine it with your CSA scores, which track compliance, safety, and accountability. We're talking things like hours of service, brake, tire, and load securement violations. Put together, your MVR and your CSA inspection violations create this strict, inescapable, and complete risk picture for the underwriters. Because they have all this combined data, insurers can track your behavior over time. They aren't just punishing isolated incidents, they actively punish patterns. A single small violation creates this compounding ripple effect of risk. If they see repeated violations, like, say, multiple bad roadside inspections or repeated speeding tickets, it sends a loud, glaring signal to the insurer that a massive future claim isn't just possible, it is highly likely. All right, Part 3, the most costly violations and the massive penalties that come with them. Let's count down the 5 absolute worst insurance red flags. Number 5, preventable accidents. These are a huge factor in risk evaluation. Number 4, distracted driving, specifically cell phone violations, which are causing lawsuits to absolutely explode right now. Number 3, excessive speeding, particularly 15 miles per hour over the limit or speeding in work zones. Number 2, reckless driving. This just screams aggressive and chronically unsafe driving to an insurer. And the absolute worst, number 1, a DUI. This is catastrophic in the commercial world, and coverage is very often completely refused. These specific behaviors dramatically increase accident severity, lawsuit exposure, and fatality risk. To really anchor the financial pain of these major violations, let's look at another real-world example from the data. A driver received 2 speeding tickets in a single year. Well, when the renewal came up, their premium didn't just bump up slightly. It skyrocketed from $18,000 a year to $32,000 yearly. That's a $14,000 jump. This happens constantly in the trucking industry. The penalty for risky behavior is just astronomical. Next up, Part 4, the nuclear verdict threat and the modern danger of lawsuits. So what is a nuclear verdict? This refers to modern trucking lawsuits where jury awards exceed $10 million. Yep, $10 million. Because commercial crashes often involve multi-car pileups, cargo damage, and, tragically, fatalities, the legal stakes are incredibly high. Insurers aggressively penalize poor MVRs precisely because they are terrified of being on the hook for these massive $10 million plus payouts. And this brilliantly illustrates the exact courtroom dynamic that insurers lose sleep over. Imagine a driver with a history of speeding causes a crash. The plaintiff's attorney is going to stand before that jury and argue that the company knowingly insured a risky driver. When a jury hears about a poor MVR, they instantly become way less sympathetic to the trucking company. And boom, the settlement value inflates massively. The MVR essentially becomes a weapon used against the insurer in court. Now, couple that legal threat with the macro industry pressures we're facing today. We have rising claims, soaring lawsuit costs, and a persistent driver shortage. This compound effect means that underwriting standards are forced to become stricter every single year. A poor MVR hurts your insurability and limits your employment options right now significantly more than it ever did in the past. Which brings us to our final segment, Part 5, protecting your driving record through smart driving habits. First off, we have got to stop making these 4 common MVR mistakes. Number 1, ignoring small tickets, thinking they just don't matter. Believe me, they add up incredibly fast. Number 2, and honestly, this is a big one. Thinking a ticket in your personal car doesn't impact your commercial insurance. It absolutely does. Number 3, not fighting incorrect violations in court. Sometimes you really do need to legally challenge a ticket. And number 4, poor overall CSA management and failing inspections. Remember, these violations often sit on your record and hike up your insurance rates for 3 to 5 full years. If you ignore those mistakes, you're facing the ultimate consequence, becoming literally uninsurable. Multiple DUIs, severe reckless driving, or repeated accidents will lead insurers to completely refuse coverage. And without insurance, well, you cannot legally operate. It's a harsh reality, but fleet drivers can and do lose their jobs immediately over a single 15-mile-per-hour over ticket, simply due to strict carrier MVR requirements and intense pressure from their insurance providers. But smart truckers know exactly how to protect themselves and their profits. The actionable takeaways here are clear and entirely within your control. Avoid speeding entirely. Maintain safe following distances. Stay strictly compliant with regulations and carefully monitor your roadside inspections. Practice proactive, defensive driving every single day. Because the real cost of a violation isn't that $200 ticket. It's the lost opportunities, the severe career limitations, and years of inflated business expenses. Which brings us to our final thought for today's explainer. Next time you feel that pressure to push the limit, ask yourself, am I rushing loads, risking tickets, and is speeding really worth thousands of dollars in premiums and jeopardizing my entire trucking career? It's a classic question of risk versus reward, and understanding the true cost of your MVR makes the answer crystal clear. Thanks so much for joining me for this explainer. Keep those records clean, and I'll catch you next time.